But the stock of the day is certainly not a micro cap. It is certainly not a small cap. It is Healius. Now, I picked it because it's agreed to sell its Montserrat Day Hospitals unit to Nexus Hospitals for pretty close to $140 million. Now, the deal is expected to occur in the first half of next year. Now, we've also got the CEO departing, Malcolm Merewether, expected to step down next year, with the current CFO, Maxime Jacquet, the front runner for the CEO role. So plenty happening there at Healius. Look at the share price, though, through this year. It is the stock of the day. Luke Winchester, Merewether Capital. I'm going to start with you for a view on Healius.
Yeah, it's an ugly chart there, Nadine, and I suspect that's a reflection of the real changing mix of revenues for this business that really boomed through COVID. A big beneficiary of that COVID testing, and I've been on a couple of times with Healius, and Australian Clinical Labs is another one, and the last couple of years have been a little bit, I won't say deliberately obtuse, but it's been difficult to really pass out the numbers as to how much COVID's really contributed to these guys. I'd sort of come to some rough numbers of around 60%, maybe more EBITDA margins for the COVID testing. So massive profits, massive cash flow, and as I said, massive beneficiaries. That's now starting to unwind. So COVID revenues in the last trading update down 85%, but the hit to those margins as well is really coming back. Plus, sort of calling out that, like a lot of businesses in the healthcare space, staff shortages, sort of some patchy demand coming out of COVID is starting to impact them. But look, I mean, I've been, when it was on before, I sort of said for the right investor, it's certainly something you can look at. Put those sort of, issues to the side for a second, and the company, they've sort of said they are temporary and they'll cycle through them. They've really cleaned up their balance sheet post-COVID, made a decent acquisition of a business called, I actually don't have it in front of me, but that's going to contribute about 15 mil EBITDA next year. And, the business is still growing at about 5%. So, I think the numbers will stay messy until COVID completely runs off. It's still contributing about 50 mil to the business. That will probably, it'll probably stay around for a bit, but, at much reduced rates. I've got it trading about 13 times earnings on sort of normalized numbers. I think after these headwinds sort of wash their way through, it probably comes down a little bit further. The balance sheet looks good. Obviously, from a momentum point of view, no chartist would touch it. But if you are a defensive investor and you're looking for that sort of style of stock, this is something I think you can look at. So I would hold it if you're there, but definitely, like I said, for the right investor, it's one that you would have on your watch list and maybe potentially move on.
Just reading a note coming out from RBC Capital in the wake of the announcement today, saying that it expects more initiatives such as cost cutting, temporary increases to debt covenants, more asset sales, will still be needed to reduce the company's debt, it says, to more manageable levels. So, Claude, I believe that you've been invested in Australian Clinical Labs previously. Considering what Luke has just said about the runoff in this massive, pulse that was brought about by COVID, are you sort of steering clear of this area of the market, or how do you view Healius?
I think that, it's always interesting to follow these healthcare stocks, and I have followed Healius over the years. It's not really been the best run of these healthcare companies, but the, transaction today that you drew attention to ourselves is divesting some of their day hospitals. And this is in keeping with their strategy to focus more on the pathology side of their business, which I think makes sense because that's probably the higher quality business overall. Of course, as Luke said, isn't it interesting how even though it's semi-predictable what would happen, the share price really follows those earnings from COVID testing. And, Australian Clinical Labs had a similar story in that, the share price followed this massive earnings bump. And as you could see the testing going down, the earnings is going to follow down as well. And yeah, that's where we are at the moment. Look, Healius doesn't have a good track record. And another bit of news today was also a CEO transition. I'm generally, that generally skews me to the negative. So for example, after a CEO transition, I might at least want to wait 6 months or a year before going into the stock. 6 months could be a good amount, depending on, if you already have an insider CEO, as is the case with Healius. So Either way, I'd be a bit tentative and hesitant to touch it right now, but nonetheless, it would be great if, the new CEO does get a new lease of life, take it in a new direction with more pathology, might be higher margins in the long term, should be a decent business to watch, but not right now for me.
Okay, so that's an avoid for now.